The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, the 16th day of March. My pleasure to be here. Somehow we survived the Ides of March yesterday. And a couple of things that are happening now are really important. But first, let me say thank you to our hosts. And we have programming. What is today? Wednesday, of course, Fed Day. Fed comes up at 2 o'clock Eastern Time. 2:30 is usually a conference. 2 o'clock decisions are made in the market. So we've got a lot to deal with. Let's just do this right now. The Dow is up 11 at 17,262. We've got plenty of time. There's nothing much we're going to be able to do until the Fed makes a statement. I'll give you my guesses as to what I think is going on. Doesn't matter. Let's just immediately go to the charts. The E-minis are up 1 at 2007. Look at this left side, right side price time match. It's been hitting that trend line, stopped at a peak E. They could have recycled, and we'll know it's recycled if by 4 o'clock at the close today, the E-minis, instead of being at 2007 where they are right now, have powered right through the 2015 high that was made just 3 days ago and are trading somewhere into the candle high of the 4th of January at 2036. No, let's just say into it at about 2019 to 2022. That's the upside. The downside is the 9-period moving average of 1992 to the 1989 area of the 9-period exponential moving average and the 200-period moving average. It just crossed positive. Very often when the 9 crosses the 20, you can see it right here. When the 9 crosses the 20, you're about to have some kind of an inflection and deflection point. In other words, it could go a little deeper away and then come back and test it, and it could have a zigzag pattern for a little while. So we're going to be watching this real closely. Those are the parameters. Let's just make it real clear. Two things are absolutely apparent in this chart. This is the data. Nice move up to the right side. Not quite as quick as that left side decline in January, but steady nevertheless above the 9-period moving average. It's an expression I talk about in my methodology, the Chapman wave methodology, of walking the 9-period exponential moving average support. Okay. We go to the weekly chart. Spectacular. We've had peak A, peak B. Fabulous strong moves up from that August the 24th low back in 2015. Went all the way to almost 2100. Huge move. Comes powering down, makes an arch formation, and it, unlike the Dow, which made higher lows from the 15,370 low of August, and then the 15,370 low of January the 20th, and then the 15,505 low of the, 23rd, I think it was, of the 11th of, was it the 11th? I think 11th of February. This has made lower lows. But this is a spectacular move going from 791 to 2015. That's in one move. This is one leg. So I have a theory called the single leg A up syndrome. And what it says is, as long as the power is there and as long as retracements are very steady and you go to key support levels, hold them and then start making a move towards higher recovery highs, that would say 1959 is a worst-case basis going into mid-April, because if it closes underneath there into the 1930s, you're starting to get that leg A up failure, just like you had here. It's a B, but it has the same characteristic. So that's the E-mini. Here's a 120-minute chart. There's right there is the 2 o'clock time frame. And what I did is I circled on the upside to show that whole area of 2011 to 2015, that's going to be a target if the news is pretend to be positive. That's number one. Number two, on the downside, I've got it all the way down to under 2000, to the 1995 low that was made Yesterday, was it? On the 15th, yes. So this is going to be very important. Why? Now let me move this away and I'll start explaining. As I say, today we'll go through everything we need to. We'll even go through the Chapman Wave Dow Quartet Index, GE, IBM, M, and UTX in a moment to have a look and see what are they telling us. But as I say, there's just going to be a ho-hum phase right now while we're waiting for the Fed, unless the Dow suddenly spirals to a plus 60. It's at plus 20 right now. So here we go. The Dow, INDU. You've got the Dow up 20 at 17,272. It's taken out 17,275. Let me just change this here. Is the high that was made 3 days ago. And we're going to see if we're going to be able to challenge that. What's the high so far today, did I say? 17,000. Oh, wait a minute. The high today is already 17,000. Whoa. 720. Oh, isn't that 70,272? We're almost there, almost about to make a new recovery high. And that would start a leg F to the upside unless it's recycled. So this is really good. The MACD is still strong. Stochastic still strong. We got out of our positions, and we did have an insurance, a little bit of insurance took us out. It actually had a bit of a profit. I said, if you're afraid of what's going to happen this morning, take your profit right now. Otherwise, stay in place. So now that the VIX actually has started to pull back quite sharply, and that's a little unusual going into Fed statement day. So here we go. The Dow has 17,105 as 9-period exponential moving average support. But even more important, there's this line right here, which is the 200-period simple moving average at 17,141. So there's a lot of support in the downside, and the upside's kind of open until it gets to 17,750. That was the high of the 29th of December. So I had a tough time, and I'll tell you what. I would have loved to have stayed in my long position. We had some fabulous long positions. Yeah, well, we did take a nice profit. So we could have been holding. We just got stopped out. If we were still holding, I would have said, let's not do anything and let the Fed take us out today if we're going to be taken out. Now we have to actually re-enter a position, either short or long. It doesn't matter. The way I'm looking at it is, this is the area where you expect a pullback. You'd expect the Dow to come back and test the 9-period moving average and the 200-period moving average after such a big move to the upside, holding so nicely above the 9-period exponential moving average. The MACD is still good. It is hinting that it wants to turn it down. I've got one indicator that says, be careful, because if there is a move of minus 60 or so points soon after the Fed statement, and then it doesn't come back again to a plus and stays at a minus 60 or more, S&P minus 7 or 8 or more, that would say we're in for a short-term rest period. I really love to see that. And that would coincide with what we need to see here in the weekly to be able to form some kind of a base to be able to start another move to the upside, or it's just telling us if the Dow closes under 16,000, I'd say 950, 16,900 this week, it's going to be a negative action. Oh, I didn't finish, did I? So the S&P is up 1 at 2017. The Composite Index is up 11 at 47.39. VIX is at 16.18. It's down, and I'll be back straight after this. Gold, in fact, is down some. I'll be back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So let me just also say, you see the steadiness of this move? You see the way these candles in the daily? Actually, this is even better when I show my subscribers to my opening call. I talk about the dojis, these little tiny candles. They're not all necessarily perfect dojis, but they have that characteristic small little candles and close almost at the price that they opened at. It's these big candles that have really lifted the Dow. Otherwise, it's just that these tiny little candles moving higher. But the trend, the tide, is as if you're throwing a piece of driftwood and the tide is coming in, and therefore the driftwood keeps coming to shore. And that's basically what's happened right here. And what's even more important about it is that you've got an alternate count. See, this could go to a D. When you recycle the second time to a D, well, there are a couple of wave counts. But to keep it as simple as possible, it's not even the wave count now. Look at the MACD, how nicely it's opened up. Hasn't started to turn down. And the stochastic still at 96%. That's a big positive. But on the other hand, when we're looking at this, there is room. When you're looking at so many stocks, now we can just run through them. Look what happened to the GLD. The GLD made a peak G/C and has pulled back quite sharply within this rectangle that arch formation and rectangle that I'd been looking at. So if the Fed comes out and whatever the reason in the weekly chart, you've got a D. When you get to a Chapman Wave D, you've got to start saying, and the technicals are weakening, you've got to say, hey, got to be careful. But wait a minute, the MACD is still expanding, still very good. And the stochastic's at 86% in the weekly. The monthly we can't talk about because the monthly is only halfway through. Fabulous, fabulous 3 candles, but you still can't really talk about it because we don't know what the monthly candle will look like at the end of the month. So we can talk about the weekly candle from last week and the weekly candle so far this week. So I decided I had a sell signal in place back on Friday, already by Thursday, Friday of last week. I was going to buy the inverse short position in gold. But my understanding of the chart formation is that because the larger tide at this particular point is still active and going up, I had to treat it as a shorter term trade. And gold can move very quickly. And I was so close to putting it on for my subscribers to my opening call. And even when it deflected lower, that was a great sign to say that it's going down. But in fact, all we've done, I mean, between 117 where we are and 122, 5 points. I mean, this is nothing. Wait, 117 to 100, is that 122? Yeah, so that's 5 points. Feels like more. In the GLD, I'm not sure that I wanted to play. I might regret it because this afternoon, 2 o'clock, the Fed might say something, and the dollar DXY. So gold right now is down 46. The GLDs are down 46 at 117.50. But look, the dollar is moving up. So this is really a very key moment. I've got lower highs and lower lows is the expectancy, at least I thought, going into March for the dollar as gold continues to hold very well. And even for the general market, I was thinking perhaps we could have enough strength to go into a higher March. And then you remember that expression, I'd spoken about it last year, said, riding high in April, riding high in April, shot down in May. That's that song with Frank Sinatra sang so well. And that's what we saw. We saw the May top last year. But now, wait a minute. The song's supposed to also say it recovers in June. But wait. This is such an important period because the dollar has been making monthly chart higher highs and higher lows, fractionally higher high. So this means that whatever the Fed does over the next 2 announcements is going to be really important because where I'm reading the market, I do see internal strength in job numbers. I'm seeing better jobs being applied for and discussed than I had before. And that usually is a good sign for the economy. Well, then why wouldn't they want to raise rates? The TLT is up 24 cents at 128.12. Now you've had a pretty big move from 135.25 to the 127.21 area that we made a few days ago. So that's 127. So what are we talking about? 8 points. 8 points in bonds. It sounds like a lot, but wait a minute. In the TLT, you ran up in a week and a quarter. 1, 2, 3, 4, 5, 6 days. You ran from this 127 level to the top, and you've taken all this time to come back. So the big question here is: are we making an arch formation that says no? They're not going to. The Fed is going to be a little nervous, especially with the politics situation, the political situation. Are they going to say, should we aggravate everything? Should we aggravate the market by raising rates accordingly? Let's wait. I think that's what's going to happen. And I've got an outstanding peak C that might still go to a D. Remember the Japanization of our bond yields? Because there's such deep competition for lower yields around the world. But commodities have just started to move higher. So when commodities tend to move higher, my experience, I'll have to go back and check this, but my experience has been that the yields are able to move a little higher because there's a general inflationary tendency. But inflation, we're not even, 1%, something, I don't know what we are in inflation. I saw it just this morning, I can't remember now what it said. Inflation's barely there. So I'm not sure exactly what we can do here, other than just to say, let's wait for the Fed. Let's wait to see how the market anticipates it. So far, the market is saying, hey, everything's okay. And as far as our positions are concerned, the only thing, we took profits in one of our shorter-term trades yesterday. Very nice. I can't remember what it was, 12%, I think, gain. Took one this morning. Another one in one of the commodities. We've been exiting some of the commodities that we've been in. We took a 9% gain. We went right back in this morning under the price that we got out yesterday, and it's up very nicely. It's up about almost 2%, I think, from the entry point. So we're looking at this, and I'm just saying, let's be as selective as possible. I am just upset that I'm not holding the Dow from much lower down. Remember, we bought on 20th of January and then took profits later on. We bought again in August on that big pullback. So we have been buying on the long side, and now I'm kind of neutral in terms of the indexes. So that says to me, hey, maybe you missed an opportunity, and maybe you'll miss another opportunity if the market suddenly spirals higher by the time you give your update today at about 2:15. But we'll see. That's the way you have to deal with this market. You got to take your profits, and there are certain trades that if you get in correctly, we have a copper trade that seems to be, I don't know why, but it seems to be holding really well right now, up 40% or more. I don't know. It's been tough. Thank goodness we have been on the right side, but it really has been kind of weird, I have to tell you, because we've really been in a trading range, even though the market has modestly moved higher. So that's that. I looked at the dollar. Remember the dollar right now as at 97.02. Nice move. If the dollar tanks, watch out, because at any point in the next 3-4 sessions, if the dollar closes under 95.50 to 95, that just says, whoa, dollar's going down, gold's going up. If the dollar spikes back into the 98s by Friday, that's going to really be a drag on gold. What a fascinating market. I'll be back, and we'll be looking at GE, TFNN, UTX, and IBM.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back. Got a bunch of questions. I will get to those questions. I want to first go to Joe in Boston. Joe, how are you?
Very well, Basil. How are you?
I'm well, thank you.
I wanted to talk about SLV, but just to mention, I did speak with you last week about AT&T. I had a core position I was looking to add. You said to nibble, so I did that, and I'm continuing to watch it. Hopefully we'll get a pullback and I can add to my position. But anyway, yeah, today for SLV.
Wait, Joe, just before you go on, I'm looking at TNT. We're still long for my subscribers, but it's getting a little extended right now. So I agree. Have a little patience. Not only that, if the Fed does something and the XLF, the financials start to rally because it's anticipation of higher yields, we're going to find out if telephone becomes favored even more because it has got a yield and potential capital gain, or whether there's a rotation that says, wait a minute, if the yields are going up, we're going to go to other sectors because telephone the price could start to pull back as there's competition in other areas for better yields. That's the way I'm thinking about it. So I think you're correct. Have a little patience. And as I said, let's see how it pulls back. The whole 37 area, maximum 36.50 is going to be really important to hold. So yeah, have a little patience. Now let's go to the XLV.
SLV, yeah.
SLV. The SLV is the silver, iShares Silver Trust, trading at 14.52. It's down 2 cents. It has had a very big move. Not in chart formations, in some ways it looks a little better than the gold on the shorter term, but the weekly chart of silver, the monthly looks terrible. So it's just begun some kind of a consolidation. And this is do you have a position, Joe?
I did. I got in at the end of last month around $14 on that pullback, and
right.
I'm looking to add. I got like an initial entry position, but I'm looking to build up, and this is really not for a trade. I want to build a position to just kind of hold on to for the longer term.
So if you're looking as to build a position, then I'm going to make two suggestions. One is you've got a position that started off towards the 14 area. It's at 14.52. And all I can say is if this and if that, because we don't know how silver and gold are going to respond this afternoon to the Fed's announcement. The way silver is acting right now, it looks to me like it needs just a little bit more of a consolidation. If it holds 14.35 all the way through Wednesday, a week from today, it's still holding, and it's attempting to get more towards the 14.70s instead of down to the 14.30s. I'm going to say to you, it's getting ready for a move to spike above peak B in the weekly, which is at 15.20. My reason for being just a little hesitant here is the way that the MACD and stochastic are forming in the daily might impact the weekly. If in fact silver by tomorrow, you're seeing silver trade at 14.27 or lower, then I'm going to say to you, hold off a little bit and let's look at it again maybe Monday. But in terms of building a longer term position, you're correct. In the 14.30 or lower, to about, I'd even give it 1380. I'd even give it a little bit of a cushion to the downside, 1380. If it can maintain some kind of stability there, if gold, and I do have to just add, if the GLD, since we're using the ETFs for them, if the GLD does not break this low right here, 114.74, if gold, the GLD goes under that, I think that we're going to then see whether silver has laggard strength. In other words, it doesn't follow gold on the way down, but it starts to build its own separate base, or whether it just gets dragged down. So I would say to you, that's the first part of it. The second part of it is, if I'm wrong, and all of a sudden silver, instead of consolidating a little more this afternoon, is instead of at 14.52, is trading at 14.84 or higher, then I'm going to say to you, you might want to add just a little bit more in your core position, and then you must just hold off.
Okay, sounds good.
Okay, I hope that helps you, and let's talk again next week and see what happened.
Thanks, Basil.
Thank you very much, Joe. Joe in Boston. Okay, now let me run this, folks. GE. Well, this is my Dow quartet. GE, IBM, Triple M, and UTX. My core, the core of this particular index has been my bellwether for a couple of decades, I'd even say. So at 30.59, GE stopped twice so that it has made a peak C1 and a peak C2. If this afternoon there's a favorable reading by the market, you want to see GE trading at 1360 or higher to start leg D. This D will be a little bit different. Why? Because we could have made a C1, C2, and it could be a recycle as the MACD starts to expand between the different 9-period differential and the slow-moving average. But my reading right now says from the stochastic that GE probably has to have a little bit of a consolidation, and that it's going to be trading, maybe it makes the D, but just by a fraction, and then it pulls back. I would not be surprised to see if GE consolidates in a kind of a rectangle trading range between this 13, let's call it 30.62, let's make it, and this low right here from the other day, 29.79. I wouldn't be surprised if we're just looking at some kind of a consolidation rather than breaking out now or even breaking down. IBM, fantastic move. Leg F, it might have recycled even, right on the 9-period exponential moving average, really helped the weekly with a V-shaped pattern over the left side arch highs of 141.40. I like it. It's trading 143.46, up 0.50. The monthly chart for the first time is starting to see the technicals improve. I have to tell you, I'm doing a webinar at the end of the month, and I don't know if it's up on the web just yet, but you'll see it today sometime, maybe this afternoon if it's not there, and it's going to be on what do I expect in the 3 months, April, May, June, because it's going to be probably one of the most important 3 months if certain levels are hit, not just one of the 3 months just because it trades in a range. If certain levels on the Dow are taken out either downside or upside, because it's going to tell us about wave 4 in Elliott, it's going to tell us about the sell signal in the Dow in the monthly, and can we come back? So IBM acting very well, just a shorter term to intermediate term, very good positive. Triple M had a fabulous rally off the bottom. Look at that W pattern. It's still acting so well. It's made a peak E that even could recycle right at the left side high. This is very important. Triple M making a W formation at 162.39, broke its downtrend resistance in the monthly chart. I like it. And to add to that, I'm going to mention the XLK subscriber of mine, talking about it for about a week. I've been looking at it. Didn't really want to take a position because I thought there could be resistance very close by, and I wanted to see how it would pull back if there was a pullback. But this is this S&P Select Tech Spider Fund. Lovely move. Look at that monthly chart. It's doing very well. Got a couple of questions in the den I'll get to as well, which relates to this. And now finally, you've got UTX, my bellwether short term, but UTX is my more intermediate term. And look at this. It's holding the 9-period moving average, but it's kind of stuck. It made a peak G at 100.55 back on the 26th of February. Pulls all the way back to 92. That's a pretty big move, right? That's about an 8% move. And now look what's happening. It's in the middle of the range. Will it break out to start a leg C to the upside? We'll talk about that when we get back. Basil Chapman, Dow's up 15, S&P's up 2. I'll be right back, and we'll also look at the IWM as we're going out here. Look at that, big C.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi folks, breaking news. The coming 3-month outlook in the market and which sectors could rally or fail. Basil Chapman will be hosting a 90-minute, not 60, but 90-minute live webinar with subscribers to his opening call newsletter on March the 30th. Sign up now for a 30-day free trial, 2 nows. Now to access this exclusive event. So yeah, this is the one. And it's going to be, remember we spoke about wave 4 to the downside this time last year. We got that from the May decline. This is the Elliott wave. I don't like to mix too many different techniques at the same time, but I often use something that I believe is not necessarily my work, but someone else's work, and I try to see what the relationship is. So in doing that, most importantly, what I love to do is to see some kind of complementary action. So this is something we're going to be talking about. You know, it's so fascinating. I talk about how everything comes back again, and it feels like it's the same, but it's really a little bit different. So all of a sudden, I'm looking at this and I'm saying, wait a minute. The president is going to Havana. When last would the last time be that a president went to Havana, and the United States president? What was the year? 1928. Coolidge went to Havana. Now, there's a direct relationship to many aspects of what we're looking at right now in the late 1920s. Does it have to finish up like the 1930s? Well, who's to say? It's impossible to say. But the correlation is something that you've got to take note of, because it keeps you with 1 foot on the accelerator and 1 foot on the brake. You want to know what is out there. What are the negatives that are out there as well as the positives? And there are a bunch of them. The fact that it happens to be Havana is not the negative. The fact that you've got the cycle of the 1928 with the socio-economic and political atmosphere so similar. We'll talk about that. That's what I'm going to be talking about. How does it relate? So this is going to be, this has just been launched. Front page of TFNN. Please feel free to check it out. There'll be a free trial for anyone who subscribes. Man, I tell you, this is a perfect period right now going into it, because we're looking at certain commodities just beginning to awaken. We're looking at some commodities that might be taking a bit of a rest. We're looking at, I looked at that high-tech area, the tech area itself. That's amazing. Look, I'm showing Oracle, question in the den. What about Oracle? Leg D gap up this morning. Fabulous move. Look at the weekly chart. Great move. This is actually, I should put this, no, I have to wait for the week to close before I can put an up arrow. But look at the monthly. Yes, it could fail by making lower lows and lower highs, but this is the start. This could be the start of something that is not what many people are expecting. So all I'm saying is we want to be ready. We want to be able to get a little nibble on some things that look like they have potential, etc. And I'll be discussing sectors that have improved, that could still keep going, and I'll be talking about sectors that are not good. You remember there was a sector that I discussed that had a real problem, and I said that we're going to go short the sector because I think this is what I call a hat-trick top, meaning price time, and it's done for maybe even 2 years or more. What was that sector? The IBB. Right there was the top at peak D in the Chapman wave at 400.79 in July of last year. Look at that massive move to the downside. 400 to 284, bounces up to 340. What was that? 343.87 in December. And then it has almost, it hasn't made it yet, a one-to-one move to the downside from that low, and it's gone down to 240. I am anticipating that this is going to make a inverted V-shaped pattern, and it goes down further. And I have to apologize. Who was it? Tim the other day. I said to Tim, Tim, IBB it just has enough strength. We were right there that it might go up a little bit more. And then I came back after the commercial, after it was off, and I said, you know what, but if it starts to pull back here, that's where you might want to start, at least start a short position. But my thinking was that IBB would go in this daily arch formation towards the 245 and then maybe the 240 area. Then make another H so that going from the lows to the highs as it gets ready for the next move, big move down, could go on for a while. But this is the kind of thing that I want to look at. The big picture. What are we looking at? What sectors are kind of done for, especially with this part of the politics of aiming for their pricing model? I mean, that's real. You remember Goldman Sachs? You remember Goldman Sachs? Just, they could do nothing wrong. They could intraday trade. They could do whatever they did. They made bundles until they turned around at 218.77 back on in June of last year. And then there was all that talk about Goldman Sachs and legal aspects, etc. And that could really be devastating to a stock. So, okay. Now let's go on with our, we got Rich in Portland. Rich, how are you?
Fine, Basil. Thanks for taking my call.
My pleasure.
I was looking at Covanta, CVA, and was wondering, is the chart pattern showing some life to this stock that has been beaten down?
So tell me, what do they do?
Covanta is in waste management. And also they convert waste to energy.
We never stop making waste, do we? So this is
no, we don't.
Waste management. I remember years ago, even in my opening call, I said, we've got to get a stock like waste management and just hold on, because they just nothing ever affects them. And because we make waste, that's all. It's real simple. So this has gone to a D, an E, and this might be an F, but it could be a recycle because the MACD and stochastic's good. I'm putting an F/B just for now so that you know exactly where we are. Fabulous move. This is actually leg B in the weekly chart, but it has the characteristic of a single leg A up. Now, I wonder what it is that took them down so sharply when they made that high in 214, I think it was November, at 25.34. CVA trading at 16.73, up 13 cents right now, just about to bump into the 16.88 200-period exponential moving average resistance. Had a spectacular move. So it went A, B, C, D, and then a rogue wave E to the upside. So that rogue wave E, actually, I don't want to do this too quickly. Let me take this carefully. 12.93, 12.87. Good. So that was a low. And now I'm just going to put the notation for the monthly. So do you have a position, or is this just something that struck you as very interesting?
Something that struck me as interesting as a possible entry.
Yes. So tell me, have you ever seen this before? I have to tell you the truth, CVA, I've never seen CVA. This is the first time I'm seeing it. I might have seen the symbol go by, but I've never done any work. Covanta holding, and it's also a holding company. I love holding companies. Covanta Holding Co. Okay. And you said waste and recycle.
Right. They are into the waste collection, but also they have facilities that can convert that waste into energy, which is sold to electric utilities.
Oh, so it's energy as well. Okay, so that's just not just recycle, but the recycle turns to energy. And
Correct.
a nice dividend, J&J says. Nice dividend, CVA. Okay. Now, how do you get into this? We've got a break coming up. And I think just as I was looking at, I said, there's a way to do this. I also have to ask you, do you ever use options?
No, I haven't.
You don't. Okay, it's fine. It's just a question. So Richard Portman had a great question with a fabulous looking stock, CVA, Covanta Holding Company, and we'll be back straight off these messages. And I will be doing Steve's show, so I'll still look at the commodities then.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, we're back. Now, Rich, from the tone of your voice and the quality of your question, I think that you're looking at this as if you're saying, is this a more intermediate term buy and hold? Would I be able to establish a position, a core position, and maybe either lower or about where it is now, but one that I might even be able to add to it if it starts to garner even more energy? Is that really the question?
It is.
Yeah,
I've looked at it, and it, of course, had its low of $12.48 in January of this year.
And retested successfully in the H pattern.
Right. So it's had a nice run up here from basically 12 to 16.
Well, it's doubled. So almost doubled. So well, we're up 2/3. This is 2/3. So this is really a very interesting stock in an interesting sector. And I'll tell you what I was going to suggest to you. If this is a core position, I had the same question a moment ago about Oracle. Is this a good place to buy Oracle? And I said almost the same thing. It has a different chart formation, but it's almost the same thinking, that you can nibble on Oracle, but you want to buy down about 1.5 to 2 points down. That's where you really want to start your position. So here's what I'm going to say to you. If it wasn't for a Fed meeting today, I would still be wanting to look at the short side, or at least just very short term for most of these stocks. But I'm not looking actually to place the shorts. I really want to be buying. That's the way I'm looking at it at this particular point. And this is one of those stocks. So here's what I'm going to recommend. Just so that you watch it even better, why don't you buy just to kind of a handful? I mean, it might cost you more in commission than it's worth it, but just get something now, even if it's like 10 shares or 5, whatever it is, because you're going to get a really good feeling, especially today, what happens with the Fed, without the Fed. My thinking is that it's going to go back to $16, between $16 and $15.50, maybe even $15.20 over the next week and a half to 2 weeks. That's what I'm looking at. We don't know, because it's impossible to always say with absoluteness. But what I am saying to you is I love the chart. I love the way it's acted. I like the way it's participated with the market. But I wouldn't get carried away by entering now. I would just start the position. The real position that I would be beginning to look at as a core position would be preferably in the mid-15s. Under 16, in the mid-15s is probably best. So that's the way I'm going to leave it. But let's do this. It's Wednesday today. Thursday, Friday. How about Monday or Tuesday? If you do have an opportunity to call me, let's look at it again. It'll also remind me, I'm going to put a big note here, CVA, Monday. And I'm going to make a note, and that's what we'll be looking at. But nibble now, you want to add to the position later. But I like it. I do think the way it holds after this leg B, the next pullback is going to be really important, because if in April it's able to get to $17.80, that 200 period moving average of 1865 will beckon. If it fails under 15, it says, whoops, it might not be ready, but we'll see if it holds support at that particular point. So that's the way I'm looking at it. Hope that helps you.
Yes, it does. Thank you very much, Basil. I'll call you Monday.
Thank you very much. Yes, thank you very much for calling. That's Rich in Portland, Oregon. So let's do this quickly. So USO, I am going to be doing Steve Rhodes' show at 1 o'clock. And since we're just biding our time, waiting for the Fed, I'm going to give the parameters to look at. Let me show you the USO. USO had a very sharp pullback from its recent really big gains. I say sharp pullback just on a daily basis. If you're looking at the weekly, this is nice action. So USO is going to be important because of the United States oil. So the question was, what's the wave count? It made a peak E. It's in the retracement, trying to get back. If it goes decisively above $10.35, that's really good action, especially in the weekly chart. Hope that answers that. The VIX index, what's the wave count? I'll do some of the ones I don't get to. It's in leg C to the downside and is holding support, the VIX index. Let's make it real clear. If for those of you who are not going to be with me at 1 o'clock, if the VIX at 2:15 this afternoon Eastern time is trading in the 17s, this market is going down triple digit. If in fact it goes down to 1550, it's at 1605, this market has a good chance to have a really nice strong bounce. I wouldn't be surprised if we just narrow by the end of the day. I'll see you at 1 o'clock. Otherwise,
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,